uses in case of life insurance business. Life insurance. Hmm. There are three things are there. First one, A. The gross premium, whatever the premium you pay, minus the amount allocated for the investment. The policy could be the risk one and the investment base, both. In that case, assume that you are paying a premium of rupees 1 lakh per annum. Out of that, at the time of taking the policy, the agent would have told you about the investment. This much percentage will go for investment. If that be the case, if 25% if it goes to investment, 1 lakh minus 25%, that is 25,000. 1 lakh minus 25,000, balance 75,000 will be the value of service. On that value of service, you will have to pay GST. Okay. Reduced by the amount allocated for investment or savings on behalf of the policy holder. If such an amount is intimated to the policy holder at the time of supply of service. That means at the time of taking the policy, if it has been intimated to the policy holders, then that much investment amount or the savings amount, whatever they would have specified in the policy document, that will be reduced from your insurance premium. Balance will be taxable as supply of service. In case of single premium, only one time premium you pay. In that case, the value of supply will be 10% of that single premium, whatever you pay, that will be the value of supply. Assume that you have paid 3 lakhs as single time premium. In that case, 3 lakh into 10%, 30,000 will be value of service, supply. In all other cases means if it is not the single premium or the gross premium on which the investment allocation is not intimated to you, the other one means recurring year after year during the tenure of the policy. If the policy is for 25 years or 20 years, as the case may be, if you pay year on year premium, on that how to arrive at the value of service. If the premium paid is 1 lakh, assume in all the cases, for the first year it will be 25% of the premium charge will be the value of supply first year. Subsequent years it will be 12.5%. First year 25% of the premium. That means 1 lakh is the premium. 25% means 25,000 will be the value of supply. Subsequent years, it will be 12.5% of the premium. That means 12,500 will be value of supply. First year 25,000, subsequent years 12,500. This is all about life insurance. Okay. Next, third one, travel agent. Travel agent means who books the tickets and accommodation, everything. But here it is only with respect to air travel booking, air travel, flight. Okay. If the person who books the domestic air within India, if he wants to go and he takes the assistance of the agent to book the ticket, in that case it will be 5% of the base fare. 5% of the base or basic fare will be the value of supply by the agent. If it is international booking, it will be 10% of the basic price of the ticket will be the value of supply. Very easy. 5%, 10%. If it is international, 10%. If it is domestic, it will be 5%. Within India, lesser percentage. Outside India, higher percentage. Okay? Remember in that way. You may get any valuation of these things, whatever we are discussing. Okay? This is very important. Fourth one. You might get problem on this. Okay? This is second-hand goods, where a taxable supply is provided by a person dealing in buying and selling of second-hand goods. That is used goods. As such or after such minor processing which does not change the nature of the goods, and where no input tax credit, please underline this point, where no input tax credit has been taken, in that case, what will be the value of supply? Okay. See, where no input tax credit has been availed on the purchase of such goods, the value of supply shall be the difference between the selling price and the purchase price, and where the value of supply is negative, it shall be ignored. Example, the second-hand dealer, SD I will write, second-hand dealer purchases one car from you for rupees 1,80,000. He sells the same car to another person at 2,50,000. The value of supply will be 2,50,000 minus 1,80,000. That is 70,000 will be the value of supply on which he has to pay GST. Understood? This is straightforward. Okay. When there is no ITC. When ITC is not taken at the time of purchase. Okay. If ITC is taken, assume that he takes the car from a company which charges 12% tax. That means on 1,80,000 into 12%. How much it comes? 21,600. That means 1,80,000 plus 21,600 means 2,01,600 you pay and you get the car. You will sell the car at 2,50,000, same 12% rate. If you sell the car at 2,50,000, you will collect 30,000. The difference is GST payable by you, which is effectively 70,000 into 12%, which is nothing but on this 12%. If you see, 20,000 into 12%, 84,000. That means if there is no credit ITC taken at the time of purchase, the difference between the purchase price and the sale price will be the value of supply. On this value, you will have to pay GST. If the ITC is taken, that means you have paid the ITC, I mean tax, GST to the purchaser. In that case, the value of supply, I mean how to calculate the GST portion, which is nothing but the sale value on which you pay the collect the GST, that one minus GST paid at the time of purchase. The difference between the those two will be your liability of GST. Here you calculate the value, in this you calculate the liability. Are you guys understanding now these two? Next one, third one in this. This part important. Okay. Provided that the purchase value of goods repossessed from a defaulting borrower. Borrower means, see, you take a loan to purchase vehicle. I will just say car. On 12th August 21. I'm just taking the ad hoc date. You took a loan and you purchased the car. Car value is 5 lakh. And you are taken a loan for rupees 5 lakh also, on which GST will be 12%. Assume 60,000 rupees GST you have paid. That means 5,60,000 you have paid the car dealer and you took the car. You will be running the car, but the document will be with bank. Loan from SBI. Just take it as the document will be hypothecated to SBI. You get the car on which you pay GST. Even if you can take 10 lakhs, there is no honor for it. Okay, 1,20,000. That means 11,20,000 you pay to the dealer. You pay EMI for the year 21, 22 till October 22 you pay EMI. But you will not pay EMI from October 22 onwards. Bank will be keep sending you the reminders to pay. In spite of that, you guys will not pay EMI. Okay. In that case, the SBI representative will come to your house or your business place. They take the car into their possession. Okay. And they not pay the EMI after October, SBI representative came and they took over the car on 18th December and they sold the car to Mr. R on 5th July 2023. Okay, now you have to ascertain what is the value of supply in this case. Okay, value of supply will be whatever the GST liability, whatever the GST you have paid from the date of loan till the date of sale. Date of loan means date of purchase till the date of sale. This GST value will be reduced at 5% per quarter. Okay, 5% per quarter from when? From this date, August 21 to July 23, 5% per quarter. I think I have explained somewhere quarter with respect to GST is this one, June to July to September, October to December. This is the quarter. Okay. 5% per quarter you need to deduct. 21, 22, 23. I will just take the year till when it has been sold. During the year 21, from when you have started using the car, when you purchase the car, during the year 21 when you purchase the car, on which date you purchase the car? 12th August. 12th August. That means August will fall in this quarter, no? Yes. You should take this one. October, December, you own the car? Yes. In 22, January to March, you had the car with you? Yes. April to June? Yes. Till the date of sale, you need to consider. In 22 full year, I own the car. That means all these quarters, I had the car with me. Here also I had. Here also I had. Here I sold it. 5th July. Even if you use it for one day, even if that the sale date falls within the quarter, you have to take that account. Okay, how many quarters? Here it is 2. Here it is 4. Here it is 3. Total how much? 9 quarters. That means 9 into 5% is how much? 9 into 5% is how much? 45%. You need to reduce from this, whatever the GST you have paid. This into 45. Total 54. What is your GST liability? 66,000. You will have to make the payment. Are you getting? Okay, now we will see the text. See, just link these two, the whatever the problem we have solved to this text. Okay, see, provided that the purchase value is 10 lakhs. Purchase value of goods repossessed from a defaulting borrower. Defaulting borrower means who has not paid the agreed EMI. Okay, who is not registered. Assume that you and we are not registered if you take the goods for our personal use. Okay, not registered. For the purpose of recovery of a loan or debt shall be deemed to be the purchase value of such goods by the defaulting borrower, reduced by 5% points for every quarter or part thereof. Every quarter or part thereof 5%. Right? 5% means how many quarters? Total 9 into 5%, 45%. For every quarter or part thereof, between the date of purchase and the date of disposal by the person. Date of purchase is August, that means this quarter. Date of disposal by the making such repossession. Who is making the repossession? Bank. When he is selling, disposed 5th July, this quarter. That means total 9 quarter, 45,000 you have to reduce. Even you can reduce from this 10 lakhs or even you can reduce from this GST, both one and the same. It doesn't make any difference. If you reduce from this value, you will get the value. That value will be compared with the sale value. The difference between the two, like this. Difference between the two, this one, on which you apply the GST rate, you will get the GST liability to be discharged. Understood? Okay. Shall I give one problem? You took a loan on 6th January 20. You pay EMI for the year 21-22 till October 23 you paid the EMI. From November you did not pay. On 18th November they repossessed. They sold it on 5th December 23. Tell me what is the value of repossessed vehicle or GST liability, both one and the same. If you tell me the value also, well and good, or if you can let me know what is the GST amount, is also okay. GST is 12%.